Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Shah and you're watching IndianOpen. Let's go straight to the headlines. The government appoints former Economic Affairs Secretary Shaktikanta Das as the 25th RBI Governor within 24 hours of Urjit Patel stepping down. The Congress regains power in the Hindi heartland, is set to form governments in Madhya Pradesh, Chhattisgarh as well as Rajasthan. The Chinese cabinet will consider removing surcharge imposed on US-made cars in further de-escalation of the trade war. And Google CEO Sundar Pichai refutes claims of bias in his first appearance before the US Congress. Well, the trade setup. Let's take a look at the trade setup for the day. Firstly, the global picture, and there is some positivity out there in the global markets as well. Keep that at the back of your mind. Firstly, the Huawei CFO has been granted bail in Canada, released on a $10 million bail. What further signals as a bit of a de-escalation of the trade war is China's signals that it may cut tariffs on auto imports from the US. So that's the other small whiff of positivity that came in, which had a bit of a bearing on the US markets, which were fairly choppy in a trade like in a day like yesterday. Mind you, Donald Trump, amongst a lot of other things that he did, including talks of shutting down the government, etc., also made a small point on the Huawei CFO issue, saying that if I think it is good, I quote him, this is in a Reuters interview, that if I think it is good for what will certainly be the largest trade deal ever made, which is a very important thing, which is good for national security, I would certainly intervene if I thought it was necessary. So there's a bit of a de-escalation of the tensions around the trade war between US and China. It had a small bearing on the US markets yesterday. It is, and that momentum of sorts in selectively is getting carried forward in the Asian markets as well today. If you see Nikkei, that's about a couple of percentage points. Hang Seng is up about 1.4% as well. Shanghai a little more muted, about 1/3%, and the SGX Nifty even more muted, just about 0.1, 0.2. 0.02%, so it's extremely flat for the SGX Nifty in the session today. Now, whether or not, the question is whether it is a case of a short-lived rally, the small bit of rally that we had yesterday, 2 or 3 points that we made yesterday as well, just want to bring out, there's a bit of a positive bias in the FNO universe. Almost over 75% of the stocks in the FNO universe had some positive bias yesterday. Consumers and financial names saw selectively some long build-up too. But I would presume that largely because of the extreme short bias of the market, there was selectively some short covering as well as some long unwinding that happened. The other bit is, and I would urge viewers to go onto the website and try and read this story as well about how domestic insurance companies and select mutual funds saved the day. There was some cash market buying being done in a lot of stocks like ITC, etc., which is why the DII flows were the highest in more than a month. And I reckon selectively deployed into heavyweight stocks, TCS, ITC, for example, saved the day for the markets. It also led to some short covering, of course, and the belief around the Feb 12 circular not presented in the same shape and form. So there was positivity there, but FIs continued to sell. It was the largest daily outflow in more than 2 months. You don't quite know whether this will continue or no. So it was a tale of two flows, two different kinds of flows happening, which were at work in play yesterday. You don't quite know if the FI selling continues in the same vein, and if the DI buying does not come back in the same vein, then there might be some bit of disappointment going ahead as well. Not that the market has too many triggers to really go up right now. However, yes, the big news is that we have a new RBI governor, and we'll talk about that in just moments from now. But let me also talk about 3 or 4 stocks or set of stocks that could be in focus today, aside of course, the larger markets. So sugar stocks will be in focus. Brazil has moved to WTO against India's support to sugar companies and the exports thereof. So while the stocks have been very active off late, if indeed Brazil wins this, then it could be a bit of a dampener for some of the Indian sugar mills. So do watch out for those. The US court's red flag for Dr. Reddy's. The appeal to begin Suboxone sale has been rejected. The sales ban will give Indivior time to challenge the verdict. I think it's banned till December 20th. Do watch out, and let's see if Dr. Reddy's has some knee-jerk negative reaction. Jio has announced restructuring plans. They're going to try transfer fiber and tower assets into separate companies. Let's see if there is some reaction on Reliance Industries. Closed marginally higher yesterday, by the way. And Nomura has upgraded Sun Pharma to a buy. It's a small hike on the target price. But, the dealers check on Tuesday suggested a buyback in offer, the higher sales and cost control to lead to margin expansion, all of it in Nomura's views. More importantly, the stock was very active yesterday. Let's see if there is more in store. However, let's tell you what lined up on First Word today. The collection of the top editorial stories can't get bigger than the RBI Governor. Shaktikanta takes over as the Governor at the Reserve Bank of India at a time when RBI's independence is perceived to be under threat. Ida sums up that task at hand, and then we speak to Rajiv, Malik and Ananth Narayan of what the market wants to hear from the new RBI Governor. Tamanna then lists out the top 5 takeaways from the poll results and the impact it might have on the general elections. The BJP's change of fortunes have got brokerages worried though. Darshan comes in and tells us why. The government's appointed a new RBI governor within 24 hours of Ruchit Patel's resignation. Former Economic Affairs Secretary Shaktikanta, as you all know, will pick up the baton. One of the government's most vocal voices after demonetization, Das was appointed G20 Sherpa after he retired in May 2017. The 25th RBI governor takes over during trying times. Ira Duggal sums up the task at hand.
In the course of 24 hours, we have seen one RBI governor abruptly resign and another one being appointed. But the reality of the situation is that individuals move on. It's the institutions that matter and the strength of the institutions that matter. From here on, the focus thus will be on who is Shaktikanta Das and can he uphold the functional autonomy of the Reserve Bank of India and resolve some of these very ugly differences that have cropped up between the RBI and the government in a manner which doesn't compromise the RBI. So a brief mention of who Shaktikanta Das is. We all know him from his recent stint in the government. He's a 1980s batch IAS officer of the Tamil Nadu cadre. He was currently a member of the 15th Finance Commission. He was also a representative at the G20 in the role of a Sherpa. He will now demit those two roles as he takes over the role of an RBI governor. We know him, most familiar with his role played during the demonetization period. He was at that point in time the Economic Affairs Secretary, so he fronted the government's defense on demonetization. Those images of him and Urjit Patel standing together with the newly minted notes are imprinted in many of our minds as we watch that entire demonetization story play out. He was a great supporter, at least at that time, of demonetization. Perhaps in the role of an Economic Affairs Secretary, he had little choice but to support demonetization. But he did support, or at least voice all the thoughts put out by the government that demonetization will lead to black money being eradicated from the economy, greater digital payments and counterfeit currency also was some of the reasons that he had given. But that's in the past. The question is, what are his views on some of the issues that we are facing currently? Unfortunately, he has been very quiet on the current views. There isn't much commentary to go by to understand what he, for instance, thinks about the amount of capital on the RBI's balance sheet, or what his views are on governance structures of the RBI Central Board, or mundane matters like the prompt corrective action framework, or what are the Basel norms that should be applied to the Indian banks. We don't have his views on any of that, and in some ways that's a silver lining, because he can now fashion his views based on his view as an RBI governor. So he can go into the institution, he can take stock of the issues that are being debated, and he can form a view based on what the view of the institution is and whether he wants to make any changes on those views or not. So that's sort of the table that he goes to and the issues that he deals with on that table at Mint Street. The markets will be watching from here on to see what happens on those individual issues. You may or may not see any reaction on the markets. I think the fact that you have a new governor appointed quite quickly, that will certainly be a relief. But I think the judgment on whether he is the right governor and he's taking the right decisions will be based on what happens on individual issues, whether it is on banking regulation or it is on his views on monetary policy, etc. On monetary policy, though, it has to be said that the danger of any sharp change in stance is very limited, given that we are under now a monetary policy committee regime. So that's it. We have a new governor and we will make a judgment on him as we start to hear from him on newer issues.
Well, that's from Ira Duggal. Now let's get in two very eminent voices to talk about these. Rajiv, Malik, strategist at River Valley Asset Management, joins us on the phone line from Singapore. And Ananth Narayan, professor at SP Jain Institute of Management and Research, joins us on the line from Hong Kong. Gentlemen, both of you, thank you so much for taking time this early in the morning. Ananth, let me start off with you. I remember a conversation that we had day before yesterday, or yesterday when this, day before yesterday when Urjit Patel put in his resignation. And I think one line that stood out from your conversation was that the investors would be a worried lot. Sizable number of debt and money market investors would be a worried lot. Does this alleviate those worries?
The worries will remain, Neeraj. So look, normally a bureaucrat being appointed as the governor should not raise too many eyebrows. We've had fantastic governors in the past who have passed bureaucrats. And somehow the RBI has always managed to mold bureaucrats coming inside and make them one of their own. These are not normal circumstances, however. We've just had a sitting governor resign, clearly in the wake of serious differences with the government on some very, very substantive issues. And Ira pointed out to many of them. Things like the government wanting an extra dividend from the RBI, the government wanting the RBI to relax norms on lending from the PCA banks, give relief to the NBFC sector, and so on and so forth. These are very, very contentious issues, and clearly there was no meeting ground between the RBI and the government. Now, what the investors will be worried about is that we have a pliant governor who's been appointed who will essentially toe the government line and compromise and give up on some of the stance that was taken by the prior governor. Now, clearly that's a little unfair, and we'll have to give Mr. Das the time and space to demonstrate that he's his own man. But the needle of suspicion will start that here is a person associated with the government who's now been appointed at a critical time, and therefore any decision he takes will be subject to a lot of inquiry. By the way, that doesn't necessarily mean that there will be chaos in the markets. Remember that we have ample space within the RBI reserves and within people intervening in the domestic markets to ensure that markets are under control. But medium term, there will be questions about the independence of the RBI and what this means for overall financial stability at a time when the fiscal deficit isn't looking great and populism is on the rise.
I would want to play the devil's advocate out there too, but just let me get an initial thought from Rajiv, Malik out there too. Rajiv, what is your reaction to this? One, that the move has happened in less than 24 hours. And I remember yesterday a lot of us were talking about how there has been no statement from the government about what the course of action would be. They moved swiftly. And then on the nature of the person at the helm of RBI now.
Well, you have to appreciate how we've come to this stage. And I think the government is essentially playing it safe, going ahead with a known entity who perhaps known, but a competent entity who's also perhaps sensitive to their requirements, requests, etc. Now, I think the legacy of Shaktikanta Das as RBI governor will start from day one. And it's up to him how he wants to play that. Does he want to go down in history purely as somebody who did government's bidding while being RBI governor, or take on a much more balanced approach? Don't forget, there's a rich history in India of bureaucrats being appointed to the RBI and often changing their colors simply because they're driving a different bus or painting a different campus. So I think it's best not to prejudge. But my sense is he is going to be a bit more sympathetic to government's requirement compared to many others, simply because if that were not an issue, we would not be talking about any kind of change that's coming through.
Interesting. Rajiv, just on that, I think a couple of people that we spoke to yesterday were saying that would it be such a bad thing for the Reserve Bank and the Finance Ministry to work in tandem, because unlike the past, we are a larger economy aiming to become much larger over the next 3 or 4 years, and maybe you need two institutions not to be yes man to each other, but to work in tandem as opposed to have a standoffish behavior with each other.
Well, I mean, when we talk about independence of central banks, that doesn't mean that there is zero communication between the central bank and the government or the Ministry of Finance. I think what's happened and how we've got here is the last two governors who had exemplary academic credentials, but there was still an issue in terms of getting the communication strategy right. One was not shy to talk about anything under the sun, and even beyond economic issues, the other barely managed to be visible even on economic issues. So the right balance is somewhere in between. And I think there is a requirement, at least in India's case, of RBI governors being able to communicate with the bureaucrats in the Ministry of Finance and with politicians. It is not something that's taught in universities or in a PhD in economics. But it is something extremely relevant. Some can do it well, others sometimes struggle with it. You have to put all those things into account and see it from the government's standpoint. The bottom line is really going to be how much leeway is given. The NPC is the area where perhaps the new governor will have least amount of leverage simply because it's institutionalized and ring-fenced. And in any case, given what's happening to the inflation trajectory, etc., the next policy meeting will most definitely signal a change in stance and perhaps even a rate cut. And that may not be the last one.
And that may not have anything to do with who the person at the helm of RBI is. Ananth, the other bit is, while a lot of issues will be known over time only, whether or not he'll release too many weak banks from the PCA or does he open up lines of credit for the NBFCs, and frankly, all of them would be fervently hoping for it. But, just the way in which, and again, I'm borrowing a statement from Rajiv, we need to figure out how we got here. Just the way in which Urjit Patel has resigned, would it, even if the government and the Reserve Bank of India governor would want to effect some changes on the reserves bit or otherwise, would it make that task that much difficult? Because we know that an incumbent governor put in his papers presumably on the basis of those contentious issues, and therefore there will be some thought being given to moves being taken on those contentious issues in the first place. Any which ways, there is a committee now to decide on all of these matters, but nevertheless.
Well, absolutely. I think Mr. Das will be under pressure. Even if he was to take the reasonable decision in the interest of the overall financial stability, if it is a departure from the previous stance taken by the ex-governor, it will be viewed with a needle of suspicion. Look, in respect of things like the NBFCs and PCA banks, etc., I think there is a need for a healthy dialogue between the government and the RBI. And by the way, I do think it's reasonable to expect that RBI has a role to play. Where I would be concerned is if the role is limited entirely to the RBI. Frankly, the bigger issues need to be tackled by the government. Recapitalizing banks, reforming banks, ensuring that the marketplace is reformed and made more fair. Those are large reforms which are required. You cannot brush them under the carpet just because RBI is providing temporary relief and forbearance. I think the bad outcome would be if RBI acquiesces to all the government asks for in the name of providing relief, and the government does not do its part, the bigger heavy lifting of actually doing reforms in this industry. So long story short, I think, look, we needed the communication to continue. We needed actual work to be done together jointly as a team. What we don't want is a pliant RBI that gives in to everything that the government asks for, including allowing them to dip their hand into the cookie jar of RBI's balance sheet without accountability, and including, just getting forbearance from the RBI without doing genuine reform of the financial services ecosystem.
Final thoughts from both of you. Ananth, to you first, what do the money markets watch out for the most? Because I think if the NDF markets are to be believed, they still mark the rupee slightly lower than where it was.
Look, overseas investors are going to be watching this through a magnifying glass. He will be under scrutiny. The needle of suspicion will be that this is possibly a pliant governor who will do the bidding of the government fairly or unfairly. We should not prejudge, and I completely agree with Rajiv. We've got to give this man the space and the time. But unfortunately, the market will be less forgiving. The markets, though, and we saw yesterday this as well, Neeraj, markets need not overreact. And by the way, RBI has enough reserves. LIC can come in and buy equities, government bonds, government banks can come in and buy bonds. Markets can be controlled in the short term. I'm more worried about the medium-term prospects for what this does to the autonomy and the credibility and accountability of RBI. And, of course, overall financial stability, especially as we go into this messy time of elections and populist electoral politics.
Interesting, and time will tell whether or not he makes moves which are liked by the market as well or no. Maybe both of you are right. Give it some time. Rajiv, final thoughts from you as well, and some things that you would watch out for. I know the fourth estate, for one, would probably watch out for some more communication than what was emerging from the previous RBI head, but something that you would watch out for the most.
Well, I think he's definitely on the watch list. And the first indication we might just get which way he's going to play is on December 14th, if the board meeting goes ahead and some meaningful decisions are actually made there. I think from investors' perspective, it's really going to be whether or not he's going to walk the talk of a central banker, or is it going to be a different tone that it's a disguised government official as RBI head. I do think he should be given the benefit of the doubt, but he will have to scale fairly high mountain simply because the onus, given his background, is going to be somewhat against him initially.
Well, let's wait and watch if we can shrug off that cloak of suspicion that markets might have. But both of you gentlemen, thank you so very much for taking the time out and joining us this early in the morning. Really appreciate your time.
Thanks.
Two very eminent voices speaking on what is arguably the biggest decision that has happened yesterday. The other big news, of course, and something that the market was watching out for, was the election results. The Congress has emerged victorious in Rajasthan and Chhattisgarh, gaining popularity in the region that is referred to as the Hindi heartland. It's not taking any chances in another state that falls within the same region, Madhya Pradesh. The country's oldest political party staked claim to form government in the state even before the last vote was counted. The Congress has emerged victorious as the single largest party in MP2, but only with a slim margin. The story is quite different, though, in the other two states which went to polls. A clean sweep in Telangana and from TRS and all set to form the government there too, while the Mizo National Front toppled the Congress alliance in Mizoram, also with a clear majority. Tamanna Nandar sums up the key takeaways from the semi-final to the 2019 general elections.
Whatever the final numbers may say, there are some key takeaways from the results of elections in 5 states. We've picked the top 5 takeaways from you so we can break down what election 2018 has meant for both the Congress and the BJP, and of course for the big general elections next year. So very briefly, point number 1 is Rahul Gandhi's resurgence. Now, it is pretty clear that the Congress has won 2 out of 5 states, namely Rajasthan and Chhattisgarh. Madhya Pradesh is a close fight, but the Congress has made significant gains here. However, you slice and dice the numbers, at the end of the day, Rahul Gandhi, exactly a year to the date when he was named Congress president, has proven his mettle in the only competition that matters for politicians, that is winning elections. From here on, Rahul Gandhi moves ahead with a big advantage and a big victory under his belt. Conversely, if there is a winner, then there will be a set of losers as well. And in this case, it is one combination which was supposed to be an invincible election machine, that of Prime Minister Modi and Amit Shah. That combination has not worked out in all 3 states of Madhya Pradesh, Chhattisgarh and Rajasthan. Even though there was anti-incumbency, it was expected that booth-level management, powerful rallies by the Prime Minister, and that overall promise of a central government in Delhi performing would pull them through. That clearly has not happened. For the BJP, it's going to be back to the drawing board because they have to face another very big election in just a few months from now. Another big key takeaway, and I think this would be the most primary one, because in all of these 5 states, we saw farmer distress and unemployment ruling the roost in terms of issues, things that people care about and voted on. In fact, the victory of the TRS in Telangana is another example of why farmer distress is a big issue. Their Raitu Bandhu scheme has definitely got a shot in the arm. In MP, Chhattisgarh and Rajasthan, agrarian states, the kind of drubbing that the BJP has got is a reflection of how farm distress and jobs is going to be a big issue ahead of 2019. I'm also saying this because the Congress has promised to waive farm loan waivers in all of these 3 Hindi heartland states. Definitely big things are going to come up from the central government as well to tackle the issue of farm distress. Another big takeaway is what happens to others when the contest is clearly between the BJP and the Congress. In Chhattisgarh, where the Congress has performed the best of all 3, the Jogi-Mayawati combination was supposed to have harmed the Congress party. It's the reverse. The big loss in vote share that the BJP has faced, about 10% or so, in a state where the difference between the winner and the loser has always been less than 1%. This time it will be closer to 10%. All of that 10% has been gained by both the JCC and the BSP, that is the parties of Ajit Jogi and Mayawati. Also a big indicator of what happens to others in a 2-cornered fight. Let's talk about Telangana. KCR has had a massive victory. Remember, he chose to go to polls at this time and not in 2019 with the rest of the country voting for the next Prime Minister. He made that choice, and it's a risk, a calculated one that worked for K. Chandrasekhar Rao. He has also said very clearly from the beginning, reiterated today by his party and his supporters, that he is keen to forge a non-BJP, non-Congress alliance. He's made this attempt once in a meeting with Mamata Banerjee, which was a non-starter. With this big victory in Telangana under his belt, KCR will push that agenda once again. It will be a direct challenge and a headache for the Mahagathbandhan, which is already in the works, which after this win may see the Congress take a larger role. Even as the data will be passed through and analyzed over the days and weeks to come, these are the big top 5 takeaways we can talk about on this big election day.
Well, if you go by market movements yesterday, investors didn't seem too concerned, but that could well have been a day's phenomenon because of what local insurance agencies did. But if brokerages are taking note in the possible shift in the political climate and warning of higher volatility ahead, Darshan is standing by with the key highlights from a clutch of reports. Darshan, good morning.
Yeah, so good morning, Neeraj. First of all, CLSA believes that even in 2019, Modi will come in power because they believe that the NDA should win anywhere between 245 to 280 seats, which will be them. The problem challenge will be if SP and BSP combine in Uttar Pradesh. And the other worry is that if domestic investors start reducing investment, that is a problem. But nevertheless, the manifesto now indicates that there will be populist policies that will come in. That aids consumption, but impacts capital recovery that will happen. Credit Suisse also says that loss in Chhattisgarh was the negative surprise that they saw, but there's no conclusive evidence to show that the next ruling party at the center will be impacted because of the state elections that could come in. Farm loan address will be the key, will be addressed, and that is the political takeaway, but they don't see any changes to the market directions. UBS is saying that the election verdict is not positive for the BJP, and now the focus for the markets will shift towards the 2019 election. They are saying that the interactions with the investors, both domestic and foreign, do believe that Modi coming back in 2019 is pretty much priced in at this point of time, and the market risk reward remains unattractive because it's expensive at this point of time. HSBC says that state elections are not the perfect outcome to show what happens in the national election, but they expect macro stability to be maintained, but growth will be slow according to them, and the next few months will be there will be increased volatility according to them, and they see a sizable trade-off between fiscal discipline and growth. And finally, Morgan Stanley, they are saying that this is the first indication of how things may pan out in 2019. They're saying that you should not ignore these results, but be aware of the complexities in the political landscape of the company. And Maharashtra and Uttar Pradesh is where most of the action will be, because they are crucial for 2019 elections. So pre-poll alliances and what happens there is something that they're watching out for. But majority do believe that it's not a precursor of what happens in the state election will necessarily happen in the general elections.
Yeah, well, thanks a lot for that, Darshan. In fact, Nilkant Mishra that I was speaking to yesterday also mentioned this point, that barring 2013 or 2014, which is when this government took shape and form, what happened in the semi-finals didn't quite necessarily happen in the finals. 2013 and 2014 were exceptions to that rule. So you don't know whether this is indeed an indication of what will happen in 2019. That conversation is coming up at about 9:30 on Bloomberg Quint as well, so do stay tuned for that too. But for now, what we do is, and of course then we'll talk with Vikas Khemani about the market's impact of elections as well as the RBI appointment. But after this break, we focus towards the day straight, get in a battery of experts to talk about what to do with specific stocks as well.
RB Sanjeev Goenka Group, growing legacies.
It's not about the award. It never is. It's about what went before and what came after.
It's about getting recognized for the trust and confidence the customer has shown on us. We actually strive for it.
It's about the brightest ideas and cleverest implementations. It's about innovation.
It's about impact for manufacturers and help for shoppers. Tangible, meaningful impact for manufacturers who innovate and genuine help for shoppers looking for the best new things on the shelves.
It's not about the award. It is about standing out. It's about being a giant even if you're really, really small. It's about picking the leaders of tomorrow, today. It's not about the award. It's about competing.
It's about an unbiased, countrywide, face-to-face consumer survey that is unique and provides relevance and differentiation. Essentially, we're adding something to the marketing arsenal of product teams.
It's about doing one's best and raising the bar each time.
So it's about the end customer. If you have that clarity, what is this need that you're trying to solve for the end customer?
About exceeding expectations. About going all in. Coming. Product of the Year.
It's about feeling good that we are associated with Product of the Year. This is our 10th year.
30 years of finding brands that capture $1 billion.
Welcome back. You're watching Indian Open right here on Bloomberg Quint. A quick look at what's been happening across Asia. And after yesterday's good pullback on the equity markets, Asia right now seems to be in a fairly good spot. So you've got Nikkei 225 trading higher by about 1.88%, followed by Hang Seng, which is up 1.5%. Shanghai, though, slightly more muted, but still in the green. So that's a positive takeaway. For SGX, though, the start is slightly more muted. We're down about 0.1%, but nothing much to worry about out there. 10,587 is where it's currently trading at. Like I said, our markets yesterday, up until yesterday, saw significant shorts that were already in the system, which started to unwind in yesterday's session, because of which you did see that big pullback towards the second half of trade, and the Nifty finally shutting shop with gains of about 0.5% plus. But let's go across to Darshan Mehta, who's joining in right now to run us through the internals of the derivative space. Darshan.
Yeah, you're right. There was short covering that was seen on the Nifty in trade yesterday, and that's why the Nifty managed to move up about the 10,550 mark in trade. So that's the trend that you're seeing in. Today, it will be slightly muted. The SGX Nifty is indicating a downtick. So we will be close to the 10,000, pretty much at the same level. So yesterday, we managed to move up significantly. So the Nifty is trading at a premium of 30 points, and the open interest decline indicates that there is short covering that is happening. Fresh buying, however, was seen on the Nifty Bank. Open interest built up of 6%, and especially the PSU banks did extremely well in trade. What we're seeing is 10,200 to 11,000 is the broad range that the market is looking at. We are currently at the 10,600 mark in trade, and call writers are active from 10,600 to high levels, and put writers from 10,600 to lower levels. So it could go either way at this point of time. But one thing is sure, that the 10,500 put or the 10,500 at this point of time is a big support level that the market is looking at. What happened in trade yesterday was the fact that call writers became much more aggressive, but despite that, put writers were still active at lower levels, and they shed positions in open interest at higher levels. What are the stocks in the F&O band? There are two stocks in the F&O band, Adani Enterprises and Adani Power. The PCR, both for the Nifty and the Bank Nifty, managed to move up. Now, these were the counters that managed to move on high open interest build-up. So, except for Cholamandalam and Reliance Infra, which saw fresh shots on high open interest build-up. SRF, Colgate and Bata saw fresh buying on decent open interest build-up, anywhere between 12 to 14%. And the counters which saw short covering in trade yesterday included all these counters. So, open interest was down anywhere between 8% to 11%, and all these counters saw short covering that came in into their positions yesterday.
All right, Darshan, thanks very much for that. That's a quick F&O wrap out for you this morning. Gaurang Shah, Head Investment and Strategies at Geojit Financial Services, is joining us on the show right now. Gaurang, good morning to you. I'm going to start off with two stocks that took center stage in yesterday's trade. One being Yes Bank, a massive 7.5% increment on the counter. And then a Sun Pharma, obviously a hint of a buyback there. So, some interest that's coming back into the counter. But nonetheless, it was beaten down quite heavy already. How are you making out to be in terms of the moves for both these names?
Morning, Deven, to you and to everyone. First on Yes Bank, a disclosure from our side, we have a positive coverage despite the fact that there has been a lot of turmoil on fallback of negative news flows, half a dozen resignation from the board members, if you will, and of course a little bit of concern on the earnings side. But I think at the valuation where the stock is trading, it's become very attractive. Point number one. Point number two, the resignation from the board in close to about half a dozen was primarily because they are restructuring the entire board. And we don't believe that this will have any significant impact on the earnings front, and we expect the earnings to improve going forward from here on. So if I have to put everything in perspective, and of course you have a changing guard as far as the Reserve Bank of India is concerned. So my sense is there could be some amount of excitement over there as well in terms of some relaxation on the policies that were unfolded. Not that it's going to be anything negative, but in a constructive manner, positive, if you will. On Sun Pharma, Devina, whenever stocks correct the way Sun Pharma is corrected, I think it becomes extremely attractive for promoters to go and give out a lucrative open offer or a buyback, whatever you will. But if I have to look at, again, the price correction, concerns with the whistleblower, concerns with the Halol facility in Gujarat, concerns with some amount of negative contribution coming in from Taro on the international front, I think all that is there in the price. The only problem, Devina, is that Indian pharmaceutical sector, the entire sector goes into the ICU moment you have one negative news flow on one particular Indian pharmaceutical company. That's the big problem. And how soon these problems will get resolved, well, it all depends upon the nature of problem. But we are positive on Sun Pharma, and I think 575 to 620 is the target. These targets I'm talking about with 1.5 to 2 year plus time horizon.
All right, that's a quick take on Sun Pharma as well as Yes Bank. Gaurang, just stay on with us. We'll come back to you. Lots more to talk about and even bring in our technical experts in a bit. But in the meantime, let's quickly highlight, the stocks that you need to keep a close eye out on, whether it be stocks in news, some brokerage calls that have come in early in this morning. And what were the key takeaways from the persistent analysts meet? We've got Nikki, Amit and Darshan, all of them here with us. Darshan, let's start off with you.
Yeah, so yesterday in Mumbai, Persistent System had an analyst meet, and one of the key things that they said that they believe that, and they were very upfront in acknowledging the fact that, pace of transformation has been much slower than what was anticipated by the street. 4 areas where they will focus on right now: artificial intelligence, cloud, security, and Internet of Things. So these are the 4 areas they will focus on, and the focus on these 4 areas will be basically in terms of the healthcare and life sciences sector, BFSI, and the industrial sector. That is where they will focus in. They will continue to invest in the Accelerate portfolio given the opportunities in the segment. Apart from it, they continue to concentrate on reseller and value-added reseller businesses, and they are confident on margins despite the supply side guidance. So the 100 basis point margins that they have given earlier is maintained at this point of time. The company will appoint a new MD by the next board meet because of the SEBI mandate. They will have to split the board chair between chairman and MD. Anand Deshpande will continue to be the chairman, and we will have a new MD that will come in. And I had a lot of companies for acquisition. Nothing materialized, so they have cash on the books. So they will decide what they want to do in the cash in the books by the third quarter numbers.
Got that, Darshan. Thanks a lot for that. What are the other stocks in news, Nikki?
I'm going to start off with Reliance Industries. Expected to be in focus. Reliance Jio Infocom. A board has approved transferring of fiber as well as the tower business into 2 separate companies. This, however, would be subject to regulatory approvals. Dr. Reddy's lab, where the company request to start selling Suboxone has been rejected by US court. Now, this is a negative development. A key stock that we'll keep an eye out on. Aurobindo Pharma, where the Netherlands subsidiary is forming a joint venture sister company in China, and the joint venture is expected to undertake manufacturing for non-nebulizer inhaler products. Apart from that, CCI has approved two acquisition of steel division of Usha Martin by Tata Spont for around 4,300, 4,700 crore. Separately, it has also approved a Zydus Wellness acquisition of Heinz jointly with Cadila Healthcare. We're also tracking in PNC Infra, where the company's subsidiary has submitted financing documents to NHAI for its HAM project in Karnataka, which is valued around 1,157 crore. With this, it submits all the documents related to the HAM projects and further proceeds for the execution. Clearly a good development for the company. Also, we're going to be keeping eye out on the auto stocks, given that the China now seems to be moving towards cutting its trade war tariffs on imported US-made cars. This is a Bloomberg exclusive. Apart from that, there is a proposal to reduce the levies to 15% from 40% earlier, which will be reviewed shortly.
All right, so lots of stocks news there. And what are the brokerages saying?
Well, a couple of them. The first one is on Aavas Financier. Now they get their first brokerage call, and that is from Citi. Now Citi has initiated a buy rating with a target price of around 930 rupees. Now according to the brokerage, growth for Aavas would come in from two avenues. That is from the existing locations first, as they are focusing more on the under-penetrated areas, and second, the company has nearly 90% of its product portfolio in only 4 states, which suggests a good geographical expansion for the company. So these will be the two areas from where the growth will be coming in for Aavas Financier going forward. Now along with this, a niche focus and priority sector lending compliant portfolio would also support the health good spreads for the company going forward. Now the brokerage is expecting the NBFC's asset under management and net profit to grow at a compounded annual growth rate of 35% and 33% over FY18 to FY21, and is also expecting the premium valuations of Aavas Financier to sustain on the back of strong growth and asset quality, and it only sees an economic slowdown and change in managerial position as the two key risks for the NBFC going forward. The second we have is on Sun Pharma, where Nomura has upgraded the stock to buy from neutral and has marginally hiked the target price to 516 from 513. Now, according to the brokerage, currently the share prices of Sun Pharma are factoring in a muted growth from its US generic and the specialty business. However, the brokerage on the other hand expects higher sales and cost control to lead to margin expansion going forward for Sun Pharma. Now, on the recent issues of the corporate governance, it is expecting the management to reassess and take steps to reduce some of the investor concerns related to this. Lastly, it has upgraded the stock on the back of the recent correction that we have seen in Sun Pharma, which has made the risk reward favorable for the company.
All right, guys, thanks a lot for that. So a lot of those stocks to keep an eye out on. Gaurang, I want to come to you with the IT names, and not just Persistent, but the other mid-cap IT names that started to see a move in yesterday's session. What would you do now with the entire pack if you have to bifurcate between the large caps and the mid-caps?
So, Devina, I think yesterday's move by and large was more because of the huge weakness we saw in the rupee, and I don't think that's going to continue. Now, of course, you have clarity late last evening as to which is going to be that name, which will be replacing Dr. Ruchit Patel, outgoing RBI Governor Dr. Ruchit Patel. So I think you should see some strength coming back into the rupee. Point number one this morning when the markets open up, currency markets open up. Point number two, on fallback of whatever earnings we've seen, our sense is that most of the IT large cap, mid cap stocks that we cover under our IT universe are reasonably and fairly valued. But if corrections have to come in, our sense is that names like Persistent System, Mindtree, NIT Technologies, Cyient Limited, L&T Infotech and L&T Technologies. These are the names in the mid cap IT universe. In the large cap, if you will, Tech Mahindra, HCL Tech, TCS, Infosys. These are the names that we possibly would advise to nibble into at lower levels.
Gaurang, did you read too much into this Geo restructuring, or was it standard routine fare?
I'm sorry, Neeraj, I couldn't get the question.
The Geo news that came out, did you read too much into it, and what's the view on Reliance Industries going ahead?
Well, honestly, I think, Ambanis are known for cutthroat competition and offers that possibly kill competition. My sense is that despite all those free offerings, Neeraj, and of course post that the kind of commercialization of tariffs that took place, which was according to us much ahead of our time estimates, huge subscriber base and a huge untapped market as well. And when you spoil habits of subscribers by offering huge data at a very low valuation, you are actually spoiling the subscribers and getting them addicted, if you will. And then you have the pricing power coming back. So overall, we remain positive on the Jio business under Reliance Industries. And for Reliance Industries, which is now, of course, a multi-diversified company along with retail foray, and of course, entertainment also push coming through. 1550 to 1600 Neeraj is the long-term target on Reliance Industries.
Okay. Gaurang, stay on. So much more to talk about. Let's get in our technical experts on board. Ruchit Jain, technical analyst at Angel Broking, with us on the charts. Chandan Taparia of Motilal Oswal with us to talk about the derivative side. Gentlemen, both of you, good morning. Thanks for joining in. Chandan, let me start off with you. We saw a bit of short covering in trade yesterday on the Nifty banks, select stocks as well. Actually, we also saw some long build-up in select consumers. How are you approaching trade today? We're likely to start off very flat.
Yeah, good morning. Yesterday market opened negative but managed to respect its multiple support of 10,333 and witnessed recovery of more than 200 points led by support-based buying and short covering activity. During the last trading session, the volatility index fell down by around 12% and VIX is now below 18 zone. So lower volatility was because of the event out. So because of that, some consolidation could be seen. Market, which was moving in between 10,450, however, slipped below the same but again regained to its 10,550 zone. So for the day, it has to continue to hold above 10,500 zone. Then in case one can put a stop loss of 10,450 and wait for a bounce towards 10,650, 10,670 kind of level. While talking about the Bank Nifty as well, it also witnessed positive opening, but a sharp recovery of 500 points from the lower levels was remarkable. And it again reclaimed its 50-day exponential moving average. We have seen support-based buying and short covering in many private and PSU banks. So Bank Nifty, if manages to hold 26,000, then we can again reclaim towards 26,500, 26,666 kind of level. So both the indices after that has seen recovery and expecting some consolidating move with limited downside as well as the upside in the market.
Okay. Ruchit, what would your approach to trade be today?
Hi, very good morning, Neeraj. Neeraj, from a short-term perspective, usually we see two things when approaching the indices. One is the trend and second is the momentum. So if I talk about the trend first, the kind of volatility or the ups and downs that we have seen in last 2 or 3 weeks, due to that, the trend is a bit unclear. For a higher top, higher bottom structure is not there in the market. Neither we are seeing a low top, low bottom structure. So this is more of a consolidation phase that could be expected in the markets going ahead. But if we talk about the momentum, then yesterday the recovery that we saw from the lower levels in both the Nifty Bank as well as the Bank Nifty index, the momentum has now shifted on the positive side. Not only the Nifty index, yesterday's low of Bank Nifty after this huge gap down opening, that low marks around the 61.8% retracement of the entire previous up move. Even the mid-cap index, which has been an underperformer in last 1.5 months, has shown a rebound, and many of the names from the mid-cap basket has formed a reversal patterns at their respective retracement supports. Secondly, if you see the gap down openings in last 1 week, we had seen this was the third or fourth occasion that we have seen a gap down opening, but yesterday the entire gap was filled in both Nifty and Bank Nifty. Usually whenever we see such huge gap down opening and that gets filled on the same day, it is termed as an exhaustion gap as per technical analysis, and that limits the downside in short term. So we believe that the momentum would be on the positive side in near term, which should lead Nifty towards maybe 10,650, 10,700 kind of levels. So keeping that in mind, one can go long on 10,600 call option at current levels, which is quoting around 138. Keep a stop loss below 71, and one can expect target somewhere around 250 before the expiry.
Okay. Let's take a look at some of your stock calls as well. We'll start off with you, Ruchit. What are you recommending this morning?
So Biocon is the first recommendation to go on the long side. This stock has seen a consolidation phase, and in this entire consolidation of last 1.5 months, it has formed a triangular pattern. In yesterday's positive move, there is a breakout from the resistance end of this triangle. So after the breakout, one can certainly expect a good momentum on the upside. So one can go long on Biocon with stop below 600, expecting short-term target around 680. And Mahindra & Mahindra is my second pick. The stock is trading near its 200 weekly moving average, which is a good support. Yesterday, a reversal pattern has been formed near this long-term moving average. So we are expecting a pullback move, at least in Mahindra & Mahindra in short term. One can go long on 740 call option, which is quoting around 12.5 rupees right now. Keep stop below 3.5 for target around 30 before this expiry.
Okay. And, Chandan, you also have, actually you have 3 calls this morning. You're buying Bata, Dr. Reddy and TCS.
Yes, first talking about the Bata, comparatively the stock has been holding its gain and clearly the strength is visible in the counter. After the consolidation of last couple of trading sessions, it managed to respect its psychological support of 1000 zone and given the recent highest daily close almost. Overall trend is positive, overall making the higher top higher bottom formation and respecting to its short-term moving averages. Major trend is positive and recent dips has been bought, so that's why the fresh leg of rally cannot be ruled out. One can buy with a stop loss of 1045 for an upside target towards 1120 kind of level. Second trade is buy on Dr. Reddy. We have seen the buying momentum in most of the pharma counter, including Sam Pharma or Biocon or Divi Slab. Glenmark also witnessed some recovery. So entire sector has seen recovery, but I'll be with the counter which has potential to outperform and witnessing the breakout zone. So Dr. Reddy is the strongest counter, holding its gain, making high top high bottom formation, respecting to its rising support trend line. So it has potential to move towards 2800 zone. One can buy with a stop loss of 2666 level. Third trade, there is buy on TCS. We have seen recovery in selective IT counter. Just couple of weeks back or couple of days back, stock formed double bottom formation, and given the breakout and respecting to that breakout zone, it has also formed a pole and flake pattern on the daily scale. As after a strong recovery, it has been consolidating in a range from last 8-10 trading session. Previous day's low is also the 50-day exponential moving average and put writing is visible in the counter. So all the data setup indicates the positive stance for the counter towards 2050 kind of level. So one can buy with a stop loss of 1975 to play the 3.5% up move of the counter.
Okay, on to our special segment, Bloomberg Edge, where Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on a stock. And Yash, what's the stock on your radar today?
Morning, Neeraj, and the stock is actually Jubilant Foodworks, and a positive call coming in after the stock moved above its 21-day exponential moving average. Let's first try and understand what it means. The exponential moving average, that is basically a trend following indicator which assigns higher weights to the latest data, which essentially helps it react better or faster to recent price moves and smoothens out any wild price changes as well. Now, coming back to the chart, as you can see, the pink line over here, that is the 21-day exponential moving average. And what happened yesterday is, after falling for the 3 previous sessions before it, it managed to gain close to 5% on Tuesday, and has with that closed above the 21-day exponential moving average, something that we'd seen somewhere around the start of the month of November. It was trading at the levels of about 1100 rupees, and it crossed below that crucial level, and it went up as high as 1300 rupees, something again seen in the month of July. It went from the levels of 1400 rupees, where it had crossed above the 21-day moving average, exponential moving average, and it went up even higher. So watch out for Jubilant Foodworks in today's day of trade.
And how well has this worked in the past, Yash?
6 out of the last 8 times that the indicator has turned positive on an average, it would have given you positive returns over the next 10 trading sessions of close to 4.5%.
Oh, thanks for that. Yesterday, the consumption names were active. Jubilant Foodworks, a case in point. Colgate had fair bit of long build-up and some positive moves too. We saw Bata, Asian Paints, Titan. That whole clutch of names had some very positive moves in trade yesterday.
Yeah, the other one was, I think, Kansai Nerolac from a smaller pocket, but the stock was up about 7%, I think, in yesterday's session. 462 on the counter. A swell run towards the end of the trading session. Anything on these paint names, Chandan?
Yes, talking about the Asian Paint, however, this stock has been consolidating. Earlier, the trading range was respecting to support of 1300 zone, but in last 2 trading season, it slipped below the same, but again reclaimed. So overall consolidating move is clearly visible. Some up move could be seen, but it has multiple hurdle near to 1365. So as of now, it may move towards 1365 zone, but manages to hold above the same, then only the fresh leg of up move could be seen. So as of now, suggestion is one can go long with putting a stop loss of 1295 to playing the immediate hurdle target of 1365 kind of level. You discuss about the Kansai Nerolac as well. After the decline of last 4-5 trading sessions, the stock witnessed a strong recovery. Or in fact, the weekly chart indicates that it exactly taken support at the previous breakout zone. So I think the positive stance could be seen in the counter. Berger Paint is also showing the similar kind of trend. So some sort of momentum or up move could be seen in most of the paint company as per the price pattern and the momentum is concerned.
Okay. Gaurang, any thoughts here? The paint name specifically, otherwise it becomes too wide a bucket. Kansai Nerolac, Berger, Asian, would you buy any, and why would you do that?
So Asian Paints, Berger Paints, Kansai Nerolac, Ascon Noble, these are the names that we like in the paint segment, and I think, first of all, there was a scare on this sector because of the boil on the crude that we saw. We maintained always, Neeraj, that it's not going to go to 85, 90 and more. Any person you ask on the street on crude oil at 85, they were saying 90 and 100. And this is the second time it has happened. If you remember in 2014, when crude was trading at $125 a barrel, you had $150, $175, $200 a barrel prices coming through. It did not go crossover to 135, 140, and it came down to sub 30 levels. We maintained even then that 60, 65 is the new normal according to us for Brent and NYMEX respectively. And in that scenario, I think your input cost is going to go down. Operating efficiencies put in by the companies will improve the EBITDA margin, net profit levels, net profit margins also should improve. Good new order market, equally robust in the replacement market, diversified product offering, and more importantly, Neeraj, I think the margins from the high-end niche products like decorative paints and automotive paints have actually gone up considerably over the last couple of quarters for all these companies that we cover. So we maintain a positive view.
All right, gentlemen, just stay on. We've got some more interesting data that's coming in. HDFC Mutual Fund made an interesting power play in November. The fund house increased stake in power finances while cutting exposure to electricity generators. Yash Upadhyay is here with that and what HDFC Mutual Fund has bought and sold last month. Yash.
Morning, Devina. So clearly that's the trend. By industry, their highest exposure is towards financials, and that is where they have increased their holding. So in terms of the stocks wherein they have increased their holding, well, it is the power financiers, the PFC and REC, that is where they've added more than 3 crore shares in PFC and 2.5 crore shares in REC, along with Vijaya Bank, where they have bought in close to 33 lakh shares. IOC and Coal India are the other two names wherein they have increased their exposure as well. The stocks where they have decreased their holdings, and that is where the power names come in again, or the power transmission names. So something like an NTPC, NHPC, that is where they've reduced their holding by about more than 1 crore shares in NTPC, NHPC about 58 lakh shares. BHEL, Vedanta are the other two names wherein they have reduced their holding, and ICICI Bank also features there, 69 lakh shares sold there. But what makes it to their list for the very first time, that's an interesting bunch as well. So Thyrocare Technologies, that is what comes into their portfolio. So 5 lakh shares brought there, along with Bharat Forge and Apollo Hospitals, wherein they have bought close to 50,000 shares. But what goes out completely from their books is the likes of Granules India, where they've sold out their entire 7.4 lakh shares, Moltech Packaging, SBI Life Insurance, and the recently listed Fine Organics, wherein they have sold close to 2.5 lakh shares.
All right. Yash, thanks a lot for that. So that's a quick update on the rejig at HDFC Mutual Fund's portfolio. We've got about, I think, 2 minutes left to go for a market pre-open, just under a minute, under 2 minutes, in fact. Quick take on some of these banks in yesterday's session. Ruchit, SBI, Axis Bank, Kotak Mahindra Bank.
I think within this space, we have seen a good consolidation in SBI since last 1 month. But yesterday's low certainly marks around its good support of 270, and the up move was supported by good volumes. So a pullback move could be seen towards higher end of the range, which is around 290, 295 kind of levels in next 2 or 3 trading sessions. The volatility in Kotak Bank, in last 3-4 trading sessions, the stock has been a lot volatile. So I would tend to avoid Kotak Bank as of now until we see, the stock again going above the 1300 kind of levels. I think even Axis Bank, I think at current levels looks a good buy, because this stock similar to SBI has seen a consolidation phase since last 1 month, and now the momentum readings have turned positive in yesterday's trading session. So a pullback move towards 640 kind of levels could be seen in Axis Bank in next 2-3 days.
Okay, expect a pullback in an Axis Bank. The stock closed at about 604 odd rupees in yesterday's session. For the month, absolutely flat, muted performance. We've got about 30 seconds left to go for market pre-open. A quick glance at what's been happening in the Asian market region. it's promising. I mean, the ticks are on the green. You've got Nikkei 225, which is trading higher by 1.88%. Hang Seng has come off a bit, but just that's 10 basis points. So you've got 1.3% higher on the Hang Seng. Shanghai up by about 0.2%. For our markets, muted 10,588 on the SGX Nifty. Remember, yesterday's session was characterized by all those shorts that were persistent in the system moving out. Volatility came off significantly, about 12% under on the India Wix. Let's see how today's day pans out. But for starters, at the pre-open, you've got a positive open for the Nifty, about 0.25% higher on the Nifty 50. Sensex trades higher by about 0.6%. Starting off with the movers and the bigger names thereabouts, and Yes Bank yet again, after a big 7% move yesterday, is showing you an uptick of closer to 3.5% this morning. ICICI Bank is the other one that's up 2.5%. You've got HUL moving up 2.25%. Grasim is up 1.8%. Hero Motorcorp is moved up 2%. HDFC Bank, Ultratech Cement 1.33%. SBI moves up. HCL Tech at HCL Tech is at 969. Infosys is closer to 682. Tata Motors 159. You've got Grasim, which is up by about 1% as well. Amongst losers, handful of them, so just about 6 stocks marred in the red. So you've got JSW Steel down 2%, and the rest of the cuts are just about 0.5%. Amongst for the currency, it's interesting to see you've got a depreciation this morning of about 1/3%, 72.1 from yesterday's close of 71.87. This was pretty much indicative in the INR NDF rates.
Yep. And the bond yield should come up on your screen as well. Yesterday there was some bit of intraday pullback in the bond yields, and currently starting off marginally weak at about 7.52. What's moving around? Well, I don't know if too many stocks are moving around on news. Jet Airways has this uptick of about 5%, which I think will not last. Gati has this 8.5% uptick. I don't know if it's got to do with news. Well, the 8K miles and the Vakrangis have given off their gaining trends, and 8K miles after those series of upper circuits at 195 or 200 is now on a series of lower circuits for the last few days. At 147 is down about 5% in trade as well. Interglobe Aviation, by the way, crude has moved up, remember that. Interglobe Aviation is down about 3% in the session today. Just lastly, what's happening to the sugar names, because Brazil has complained to the WTO about the SOPs that the Indian government is giving to the sugar space. Hasn't quite brought about a reaction into any of these names right now. Maybe it will happen if indeed Brazil's complaint is taken on board and then export SOPs are taken off, and that could hurt some of these companies. We'll get to know about it when we get to know about it. Nevertheless, this is how the markets are looking on open. Let's get in a final thought from Gaurang Shah before we thank him. Gaurang, any stock within this sugar space that you guys at Geojit are bullish on?
Well, we try to avoid sugar as much as possible, not because we have diabetes or something like that, Neeraj, but purely because of the regulation overhang on the sector. Only one stock that we covered was Balrampur Chini, I believe, at 65.70 with a target of 110, 115, which was already in the place. And post that, we have never really, relooked at the counter. So maybe you can possibly trade into it. I can't advise on trading, but fundamentally, there are better sectors to look at.
All right, we'll leave it at that, Gaurang. Thanks very much for joining in. Appreciate you taking out the time. And bringing in Amit Khurana, Head of Equities and Research at Dolat Capital. He's joining us on the show right now. Amit, good morning to you. A lot of news flow and information for the markets to digest over the last few days. We sort of, in a way, have already digested most of it. Do you think that now, with a level head, one can approach the markets and see where investment is most apt?
Well, yeah, I mean, the last few days have been quite a roller coaster, and it's an unusual December month, so to say, wherein things tend to be much more muted and much more stable. But this December is quite eventful from that context. I think that there's been a lot of negative news flow, which the market seems to be absorbing pretty well. Having said that, we are still not sure as to whether we've seen the full absorption of those, because as we get along into the end part of December, early New Year, I think there's still more to come. And I think the bigger part is how will the market realign to the domestic news flow, especially on the political front, which has been our concern for some time, and it showed up in the numbers that we saw on the state elections. And also the new change of leadership at the RBI. The way we would read it is going to make a change of stance towards more dovish side from the RBI. We take it that the market will take it as a positive. And more than that, I think it's the liquidity part which will probably occupy the focus area for the market. Will the RBI sort of let more liquidity flow into the system, and that helping the growth to sort of turn a little better for the SMEs, for the MSMEs, and the larger corporate sector. So there is a lot to watch out for the next few weeks. But having said that, I think the market has absorbed most of these events pretty well. So while we're still retaining our stance, a cautious stance with a negative bias even now, we would wait and watch for the events as they unfold over the next few weeks.
Sure. We're going to be adding Q3 earnings into the mix as well now, come January. So how are you bracing yourself in terms of, absorbing market volatility to prepare for the next earnings season and the other variables like the global factors playing out on the markets? Amit?
Sorry, I missed that part. I couldn't hear you very clearly.
No, I was asking you about how are you going to, what kind of a strategy do you think you're going to adopt to make sure that you are well guarded or protected in a way to tackle issues globally? If at all earnings season turns out to be another damn squib like Q2 turned out to be, and any other domestic challenges that we were to see.
Yeah, so I think the Q2 earnings essentially got impacted by a major way on the cost front. Most of the domestic plays did show up a good top line growth, a good volume traction. We sense that Q3 may not be as bad. In fact, as we speak, there could be potentially relative better earnings for Q3 versus Q2. So from our perspective, we still believe that there is enough stance to take on the defensive names in particular. So we still like IT services. We've been saying that for some time, that even though the absolute level of trade is done, so IT will probably be a clear hedge in terms of the market volatility. Domestic staples is something that we found was expensive getting into Q2 earnings, but they have corrected quite meaningfully, and some of the names are now beginning to show very good trends. The other important aspect which I must highlight, apart from the cost pressures easing off on the raw material side, is the price intervention a lot of these companies have taken, and we believe that will also have some additional benefit coming in, and that will help to sustain the earnings trajectory better for Q3 and Q4. So our take is that IT as a hedge is a good proxy. We still like consumer staples, so we made some fresh entries there. Durables has had a poor show for a good part of the year, but we still believe that there is a major structural story there, and one should look at that. Other than that, we haven't really made any new themes to look at. We're still quite negative on the tubular space, given the competitive intensity and the impact of the new emission norms that will play out over the next few quarters. On the four-wheelers, we believe that Maruti numbers should start sort of putting up better numbers from Q4. We'll wait and watch. CVs, we have a bit of a concern, maybe showing a topish growth, so I will probably wait and watch over there. So we're probably more sort of on the side of playing it safe and cautious. And as I said earlier, BFSI, I think we will watch out as to the RBI stance moving towards more liquidity, support to the market, and changing slightly towards the dovish side. I think that will be a very big positive from the market perspective.
Amit, morning. Neeraj here. What about companies like Motherson Sumi on the news of China signaling that it will reduce tariffs on American car imports?
Well, companies like Motherson, apart from the short-term headwinds that they face because of these trade tensions, also face a structural issue in terms of how the auto market will work around. So while we don't have a formal rating on the stock, we believe that there's still a level of uncertainty that will unfold over the next few quarters on these business models. Company is very well placed in terms of its management capability, in terms of its leadership, in terms of its ability to leverage the balance sheet. So no concerns on that part. But I guess there is still enough uncertainty till the time you really get a final clarity on the trade issues. And that will keep these stocks under pressure. I mean, we're seeing that for auto engineers, we're seeing that for auto majors as well. So I would probably sort of stay away from some of these names at this juncture and not really go overboard.
Stay on, Chandan. So much more to talk about. We'll also get in Deven Choksey in moments from now and take in final thoughts from our technical experts too. But let's tell you all that you need to know to stay ahead in trade today. First up, banks will be in focus today. 24 hours after Urjit Patel's resignation, the government has named Shaktikanta as the 25th Governor of the Reserve Bank of India.
Dr. Reddy's intentions to cash in on the sale of Suboxone has hit a roadblock. The US court has rejected the company's appeal to begin sale of the opioid addiction treatment drug.
The board of Reliance Jio has decided to restructure the company's structure. The mobile entities, tower and fiber assets will be split into two separate companies.
Persistent Systems and Analyst Meet said that it will continue to invest in accelerated portfolio and concentrate on reseller and value-added businesses.
Amongst key brokerage calls of the day, Nomura has upgraded Sun Pharma to a buy as the risk-reward ratio, according to them, gets favorable.
And auto stocks will be in focus as China is set to be moving towards cutting its trade war tariffs on imported US-made cars, as per a Bloomberg report.
Okay, specific pockets of strength and weakness, and Yes Bank is up about a couple of percentage points. Let's get in Deven Choksey in with his thoughts as well. And Deven, will get to the market conversation too, but just 2-3 minutes away from market open. Just wanted a quick perspective. Banks at large and Yes Bank in particular, a quick perspective here. The stock has been on a roll the last 2 or 3 sessions.
Yeah, good morning, Neeraj. Well, I think we believe that the consolidation of the banking space in public sector bank is the one key driver which one will be looking at now in next 6 to 12 months. And that's where I think all the eyes and the focus would be. The successful attempt of, I think, bringing some of the PSBs into one is basically going to suggest that I think ultimately the banking space will be consolidated, which is a long awaited thing. Once you have the consolidated banking space in PSBs, probably I think the confidence of the government and the RBI would be on a higher side as far as I think the lending and funding of this bank is concerned. So to a greater extent, I think this is going to be the reality. But on the other side, we are seeing a distinct trend emerging stronger for some of the private sector banks, stroke corporate banks, where they are in the process of not only growing the business and increasing the revenue by way of transaction services, but also from the point of view of, I think, monetizing the business verticals that they have created, including insurance, AMCs and others. So from that perspective, I think these banks are remaining in demand as far as I think the investors are concerned. Yes Bank in particular, I believe that I think will have to depend on the new management to come in and probably the strategy that they would spell out. But on the whole, I would believe that I think the downside in the stock is limited. Maybe every negative has already been priced in. Market may want to see the positives emerging, which may probably take few quarters, I think, before it starts giving the result of the fruits. So overall, I think remaining cautiously optimistic as far as I think the banking and the NBFC space is concerned, though on a very selective basis.
All right, just under 2 minutes left to go for market opening. We'll take top calls from our technical experts. Let's start off with you first, Chandan.
Yep, discuss about the Bata India and expecting the positive strengths in the same. So continue to be with given stop loss of 1045 for an upside target towards 1120 kind of level.
Okay, Ruchit, what about you?
From an intraday perspective, I would recommend buying a PVR at current levels. In last 1 week of correction in the markets, this stock has managed to hold in sideways. So there is a relative strength seen, and today it's indicating a gap up opening. So one can expect a positive momentum. Go long in PVR with stop below 1480 for target of 1550.
Any trade on a Tata Motors, Ruchit?
I think I would tend to avoid seeing the underperformance in the recent past. I think we have already spoken about this M&M which is looking quite good, and it's trading near its long-term supports. So I would prefer to go long in M&M within this auto space at current levels.
Just a quick And on the Nifty Bank, which looks like starting off about 100 points higher, would you trade it?
I think the trading range of Nifty again going to be between 26,000 to 26,500 kind of level. Only on last trading session it witnessed a dip and again back to 26,100 kind of level. So expecting some put writing at 26,000 because of that range could be there. So can trade in positive side or can go with the bull call spread by buying one lot of 26,200 and selling one lot of 26,400 to play the positive to range or move of the Bank Nifty.
Okay. Gentlemen, Chandan as well as Ruchit, many thanks for joining in today and giving us your thoughts. Really appreciate your time. And thanks for being with us today. 8 seconds left for the markets to kickstart trade. We'll have a start which is marginally in the green. Deven and Amit, of course, stay on for more. But this is how we're starting off today. A fair bit of green. The pre-open rates had suggested that. The question mark is only if we hold on to these numbers or no. For now, about 1/3%. The mid caps and the small caps should come up on your screen next. They were anyways doing reasonably well yesterday and about 0.5% up for the mid cap space. The BSE small cap space about 1/3%. So the market breadth naturally would be positive. Let's get the heat map up on the screen and try and talk about what is moving and what's not. Well, Dr. Reddy's on expected lines down about 1%, but nothing too dramatic. It's a pause till 20th and then maybe the case verdict. So maybe the major reaction could come in then if it is going to be negative. But a lot of green, not too much of red and not too many losers. Yes Bank continues from where it left off yesterday. I don't know, the market is really pricing in something quite meaningful for Yes Bank, the change of guard at the Reserve Bank of India, but up about 6-7% yesterday, up another 3% today. Indiabulls Housing Finance started off very well yesterday, didn't quite manage to live up, but still up about 2.5% today. Bharti Airtel about 1.5%. Kotak Bank is up about 1.5%. Sun Pharma continues from where it left off as well yesterday. So a clutch of names doing well. Reliance Industries marginally in the red. It recovered quite well in trade yesterday, but in today's session lying absolutely flat. Yes Bank, frankly, the standout performer on the Nifty. Just a couple of stocks that I want to highlight before I hand it over to Devina. Firstly, the movers at the broader end of the spectrum from yesterday's session. So the likes of M&M Financial and the others, and let's just see what they are doing in the session today. Marginally higher for M&M Financial, Max about 1% lower, PNB about 1% higher. So muted moves for each of these. Cities come out with a report on Awas Financiers. The target is 931. And the stock, after a 2.5% uptick yesterday, is lying absolutely flat in the session today as well. That seems to be the order of the day, quite frankly. Let's see if sugar is flat too on the Brazil complaint, if there is no big negative reaction. No, there isn't. Marginally off, but extremely flat for the sugar companies either. Not striking much luck out here, Devina. Are you spotting anything?
Well, we start off with the losers first. So IndianOpen Transport is down about 5% and Jain is down 1.6%. JP Associates, Abano Offshore, some of the losers in trade this morning. And NIIT Tech, marginal downtick of about 1/3%. But it's more about the gainers this morning than the losers. So your smaller banks are stacking up at the top. So Dena Bank is up 4.5%. You've got a UCO Bank, which is up 4.5% too. IOB 4.5%. Oriental Bank has moved well. Syndicate Bank is doing okay, 2.25% higher. From real estate, and HDIL does okay for itself. You've got some movement in Bajaj Hindustan. Bajaj Electricals also 1.85% higher this morning. Ujjivan Financial, that makes its move too. PC Jewelers up about 2% right now. JK Tire, JM Financial, Jet Airways are higher in the session too. Vijaya Bank, we're talking about that, the banking pack, 738, sorry, that's 41 odd rupees on Vijaya Bank, up 1.3%. Godrej Properties does well, so 634 on Godrej Properties. So all in all, the mood seems to be more optimistic this morning. The advanced decline ratio as well looks that much more encouraging. So I think 1:4 in favor of the advances this morning, even on a depreciating currency. Let's talk about a few other pockets. Devin, I'll come to you. We've been taking a look at real estate infrastructure, which so far, they've not been favorites, and no one has looked at making investments in them. But do you see things changing materially for them?
Well, Devin, I believe that I think for the real estate segment, segregate the commercial real estate and the housing real estate. You are reasonably seeing a good demand pickup in the commercial real estate, and probably I think the inventory which they carried 2 or 3.5 years back, I think probably that inventory has got adjusted significantly, which means that the commercial real estate has been put to use. and majority of the real estate has been put to use by, I think, from the lists of these assets, I think, which has happened. So from that perspective, if you look at it, I think commercial real estate is showing distinctly different sign compared to the housing segment. Housing segment still carries a lot of inventory at this point of time, different pockets in the country. At the same time, the new segment within the housing, which is affordable segment, I think, which has started now growing. Though there the margins are less, but at the same time, I think the volume is picking up on that particular side. So when I look at the entire space, I find that I think there are mixed trends available with different companies. The companies which are pure play housing companies, probably they are focusing more on delivering the projects in time, and in turn, I think, producing the revenue and the profits also. If I have to summarize this entire understanding, probably I would say that I think one should not be in complete hurry to buy into the real estate stocks. Maybe selective stocks where the debt position is comfortable, where the companies have not stretched themselves, where they have a reasonably good visibility about the delivery of the projects in coming 2 years or so. They are the ones, I think, where one could probably stay focused on, and I think hardly will find 2 or 3 companies in that particular bracket where you can probably, I think, try and stay focused on. But beyond that, I think no general view on the real estate space. I think we will remain selective. At the same time, I think we would probably prefer the other better down stocks where the valuations have become very, very attractive in the current market price. So certainly, I think there would be relatively better choice compared to buying into the real estate at this point of time.
Yes, bank continues to do well, about 3% higher this morning. It's interesting that the day the RBI governor puts in his resignation, the day post that the stock starts to run up. I don't know whether this will give them a little bit of breathing space and a window to probably reapproach RBI and ask for an extension for Rana Kapoor, which they had sought out earlier on till the month of April, when the RBI had rejected their request and said by February 1st, 2019, the successor to Mr. Rana Kapoor needs to be in place. But Yes Bank had pursued extension of Mr. Rana Kapoor so that there's a smooth handover and a smooth transition. They requested for an extension till April, earliest till April 2019, moving into September 2019, but that was shot down by the RBI. Now, whether this opens up a window of conversation with the new RBI governor and they actually can reapproach the RBI and make a plea to them, I'm not sure. I'm just thinking out loud.
I would be surprised. The market is thinking out loud there too, Devina. I'm sure that's the reason why the stock is doing what it is doing. But it's a flimsy premise, maybe. Amit, would you, or is there merit to this? I mean, that's my question really. I'm not prejudging anything out here. My question to you is, what do you do here?
Wait to unfold. I mean, it's difficult to take a call on these aspects. I think it's going to be difficult to really predict either ways. I think the bigger issue is the market will look out for very clear-cut signals on the new leadership team. What's their credibility and how does the bank position itself for the next phase of growth? It has had a major challenge for the last few months. I think a bigger issue is how does the leadership transition take place, rather than these shorter-term issues of getting extension by 2 months, 3 months. I mean, longer term, I don't think it really makes such an issue. The core issue remains the new leadership team, eventually that has to come, and how does it position the bank. That's what I would watch out for, and once that clarity emerges, I mean, one can take a stance on what to do next.
I must say a lot of these banking names today too, in yesterday's session too, financials we saw had a big start. Today some of these smaller names, Corporation Bank, United Bank, Dena Bank, Bank of India, this whole belief about whether the new governor opens up lines of credits for NBFCs as well as some of the weaker banks come out of the PCA. I don't quite know if that will be the stance that could be taken, but maybe that's the reason.
It's interesting, Neeraj, to look at all of these banks, and these banks are the banks that were under the PCA framework.
Yeah.
So, the likes of Corporation Bank, Oriental Bank of Commerce, Allahabad Bank, UCO Bank, Indian Overseas Bank, United Bank of India, you just keep pulling them up and you'll see a little bit of a twinkle of excitement in these names.
Yeah, I don't quite know if there is fundamental merit to it. That's the only limited point. But anyways, the stocks are doing well. Even there might be fundamental merit out here. I don't know how you are thinking and what would your advice be to your clients who are asking for opinion on what to do with the PSU banks. Not necessarily the smallest ones, but the mid-sized ones, which are under the PCA right now.
So Neeraj, I think from long we have carried one particular view that mid-size and the small-size PSBs are most vulnerable to the economic situation in which I think we are currently in, and probably I think they would not be finding enough amount of buyers also, if I have to put it, I think as far as I think the new investors are concerned. The reason is very, very simple. I think these banks require the long-term visibility in their business model. Unfortunately, I think being PSBs, I think they have the short-term tenure of the management who would come in for 3 years, run the bank and then go away and shift it to somewhere else. In the lending institutions, I think it is imperative to know that I think management should be given at least a charge for next 10 years. Unless and until I think they know their borrowers well, I think such kind of companies cannot prosper and progress. So as a result of which, investors would be extremely wary of putting money into such kind of practices where the government is not interested in keeping the long-term tenure of the management. In my viewpoint, I think if they do consolidate, which in all likelihood they will, in such situation, I think they'll have to keep a good or give a good attention to this particular subject of giving the longevity to the management. They've recently done it by way of, I think, bringing the private sector entrepreneur into Bank of Baroda, and probably I think they will have to do it same. I think if they consolidate some of the mid-tier PSBs and the smaller PSBs into one and allow them to grow, I think they'll have to give the long-term visibility of the management to these banks. Should that happen, I think that would be an opportunity to look into them once again favorably. But till that point of time, I would think that I think it may probably give the sentimental boost to the banks. If the PCA part of the guideline is being relaxed, I think it may give sentimental boost to them. So for traders, it may be an opportunity, I think, if they get the sentimental boost. But otherwise, for long-term investors, certainly they would seek the clarity which I asked for.
What would you do, Amit, with a Maruti now? I mean, looking at how the counter is making its move, went all the way down to sub 7,000, then reclaimed some lost ground, went to about 76, 7,700, fell back down, now around 7,400. A volatile move off late, but would that warrant a position in the portfolio?
Well, yes, it would definitely warrant. We've started re-looking at it closer to the 7,000 levels. We did expect the numbers to be relatively better off, but it's not really worked out to our expectations. We are still keeping our hopes alive. I think December may not be that great a month, but somewhere around Jan, Feb, we would expect some recovery to sort of work out in the four-wheeler space, and that's where we're holding on to our conviction. The other important element is some price interventions being made by the company to manage the margin situation may also work out in favor in Q4. It may not show that much of an impact in Q3, so to say. So our stance is that the valuations have corrected, so have the earnings expectations, and to that extent it deserves a relook. But having said that, it's going to be a very, very close call in Q4. I mean, if numbers keep deteriorating, then obviously this couldn't be in for some pressure. But our stance is that numbers will start recovering, and eventually it may be a good entry point to make. Versus two-wheelers, we've been sort of more structurally negative. Four-wheelers, passenger vehicles is the space that we prefer from a consumer perspective.
Okay, gentlemen, we'll leave it at that. Amit as well as Deven, thanks very much for joining in this early morning discussion. Markets, though, active in early morning trade. Now we've surpassed 10,600, 10,620 on the Nifty, 35,364 on the Sensex.
On the other side of the break, two very interesting discussions. Firstly, RBI gets a new chief, BJP loses ground to Congress. Should the markets be bracing for volatility? We talk about that with Neelkan Mishra of Credit Suisse and Vikas Khemani of Carnelian Capital Advisors.